If at the end of this video, you are not able to detect your daily bias correctly, then trust me, you literally need to see a fetish priest or a prophet because it might not be a technical problem, but rather a spiritual problem. Welcome back, guys. My name is Bilone, and in this video, we are going to talk about how to identify daily bias with the highest probability what's possible. Okay. Now, this thing is very simple, extremely simple that even a 10-year-old can just replicate. So don't overthink this. Just let's get into it. Now, we are going to use a very simple theory called the candle continuation theory. This thing is widely known, but let's use the notes on the internet. It's extremely powerful if you try to apply some rules to it. Now, candle continuation theory simply says that if a candle closes bullish, the next candle is bullish. If a candle closes bearish, the next candle is going to be what? Bearish. But we are going to apply this only on the daily time frame. So if you have a daily candle closing bullish, then the next daily candle is going to be what? Bullish. If you have a daily candle closing bearish, then the next daily candle is going to be what? Bearish. Right. But there are some rules that you have to take into consideration before this will work perfectly for you. All right. Not perfectly, but at least with the highest probability what's possible. Don't second guess your daily bias. Let the market show you what the daily bias is and just follow it. All right. So we are going to focus on two daily bias, right? Let me say two type of biases. The first one is going to be based on the day, right? So you are going to frame a bias based on the day, frame a bias based on the day. Now, the second one is you are going to frame a bias based on the intraday price action. And this is very important. When I say frame a bias based on the day, we are simply going to use the daily candle. Look at the daily candle and say, okay, the next day might be bullish or the next day might be what? Bearish. But when you go to the lower time frame, you might see that, okay, the market structure is not aligning with what we said on the daily time frame. So at that point, it becomes what? An intraday bias, right? Like maybe sessional bias or something bias, or maybe short-term bias, right? So let's call that short-term bias. Okay, so you're just going to consider these two things to be able to what? Be able to understand and frame the daily bias what correctly. Now that you understand this, let's look at what I have over here. Now, it is extremely important for you to understand that if a candle has not closed outside the previous candle, it is still it is still having the momentum that the previous candle had. So let's consider this candle that is sitting right here. This we all know is a bearish engulfing pattern. We have the bullish candle over here, and we have the bearish candle that engulfed the bullish candle that is sitting right here. So this bearish candle has closed outside the bullish candle, so it has engulfed it. So at this point, you say that okay, since we have this bearish candle taking control over this bullish candle that is sitting right here, you can now see that now the market is trying to what? Shift bearish. Okay. Now look at the second one that is sitting right here. This one is a direct short, like you see at the bottom. Now look at the second one. We have a very strong bullish candle and we have a bearish candle, but we are still within the what? We are still within the bullish candle. Okay, so at this point, short-term bias might be bearish, but daily frame or daily bias is still what? Bullish because we are still within this what? This daily candle. Please pay attention. Very simple. Don't overcomplicate anything. If you close outside the previous candle, we are going with a what? With a close. If you close inside the previous candle, we are still in the bias or the direction of the previous candle. But short term, we might be trading, we might be moving in the direction of the current candles that we are working with. Okay. So this one you have to wait because there's not enough confirmation. This thing that I've marked at the bottom over here, let me use the presentation to resistance right here. Demonstration, yeah. So this thing that I've marked over here is a demand. So at this point, you can see that this market closed very bullish, but this market has closed bearish, but it is not at the demand. Okay. So at this point, you have to what? You have to wait. You can anticipate that the market will come to the demand before it moves up. Okay, because that is what normally what happens. And I will show you an example of gold. I have a trade on gold right now. I'll show you an example. Okay. So the same thing applies to this one. We have a very bullish candle that is sitting right here. We have a bearish candle. We have another bearish candle. So short-term bias is what? Bearish. We are being bearish till we reach this area of what? Demand. Then we cannot literally move up. Right. So this might be a daily candle. These two also might be a daily candle. So overall on the day, we are going to say that we are bullish, But for short term, we are what? We are bearish till we reach this area of demand where you can anticipate the market to what? Move up. Very simple. Now, this is a strong sell signal. And the reason why I say it's a strong sell signal is that it takes liquidity from the what? From the previous day candle. Most of the time, when you look at the chart, when a candle closes by taking liquidity from the previous candle, we move in the direction of the, we move in the opposite direction. Okay, so at this point, it is not going to be weight, it is not going to be a moderate short, it's going to be what? A strong short. Sometimes it doesn't follow through, but most of the time it does what? It follows through, and it's a very powerful what? Signal that we might move in the opposite direction for a long time. I hope this is very simple and this is very what? Understandable. Now, let's try to understand how these things look like on the what? On the lower time frame before you even go to the chart and look at some examples over here. So let's start with this signal that is sitting right here, the short signal. So the short signal, when you move on to the lower time frame, this is what you see. So on the day, you will see that the market is moving up. The market is moving up like this. Okay. Then we have this bullish engulfing pattern. So the candle, the market strategy is gonna shift from what? From bullish to bearish. This is bullish. We have the higher low, higher high, higher low, higher high, higher low, higher high. Then you make what? A lower low. So this lower low is most of the time the bearish engulfing what candle. So this is what people call shift in market structure. I think the state delivery is just a bullish engulfing pattern on the what? On the higher time frame. Right. So you literally have to wait for the bullish engulfing pattern to what? Close. Because if you don't wait, at the end of the day, it might be what? It might just be a pin bar, right? A hanger man, and you're going to be on the wrong side of the market. So you literally have to wait for this what? Candle to close. Okay. For this one, we have a very bullish candle. You can see, we have a very bullish candle like this. Then you have a bearish candle like this, right? Then you have an area of demand sitting right here. We have an area of demand sitting right here, right? This is how it looks like. So it is nothing, there's nothing to look at. There's nothing you can do at this point. Okay, the market has not given you enough structure for you to say that, okay, we might go short or you might go what? Long. We need something like this, a high, a low, a high, then a low, gets broken, then you can see that, okay, we might be trading what? Short. That is why this one is what? This one is weak, because there's not enough what? Enough price action for you to determine whether the market is gonna go short or go long. Right. Now, let's move on to the moderate short. Now we call this one the moderate short because when you short, you are not targeting the lows that is sitting right here. You are targeting the demand zone. So if the market is close to the demand zone, do not short, because it can come to the demand zone and reverse on you, and you're going to be on the wrong side of the market. Please do not short when the market is close to the what? Demand zone for the what? For the moderate short. You look at examples in the chart and you'll see what I'm talking about. So for the moderate short, this is how it looks like on the what? On the lower time frame. Let me put this one side. This is how it looks like. We have the market making a very bullish candle, then everything is being traded within the bullish candle. So the first bearish candle is going to close bearish, the second one is going to do something like this. Then you can wait for a pullback and what? We can short the market. Okay, so at this point, there's going to be a demand most of the time somewhere here at the bottom, right? The demand is most of the time, like I said, at the bottom, but the demand can be close. It can be anywhere within what? Within this candle. You just have to what? Pay attention and be able to know your supply and demand what? Zones. Okay, so you can see that from this area where the market is now trading to the demand, there's a little bit of what? Distance. So at this point, you can say that, okay, since there's a little bit of distance, what I'm going to do is that I'm going to take a short from this area so the market reaches the demand, and I'm going to mitigate my stop loss what? Aggressively, so that when the market reaches the demand and reverses on me, I'm still going to be safe. Okay, so if you want to take a short trade from here, you pick your short position, your trade goes here, your stop loss goes above either a supply zone that the market is mitigating around this area or the overall what? Swing high, and it targets the demand zone that is sitting right here. Okay, sometimes the market is not going to reach the demand zone perfectly, so don't target it perfectly, right? Leave a little bit of room, something like this, and you're going to be what? Fine. But if the risk reward ratio is not what? Favorable, it's not something that you like, then you can see that this trade is not a good trade, and I'm gonna what? Stay away from it. Okay, all right. Now let's look at the last one, the strong short scenario. Now for the strong short, it's very simple. It looks like this one, the short, but it's just that this one takes liquidity from the previous what? From the previous high. So we literally what? We literally assume that since liquidity has been taken, the move is gonna what? It's gonna run and run fast. So this is how it goes. We move up, okay? We move up like this. We have a strong bullish candle, so the strong bullish candle is there. Then we try to move lower, we fall. Then we take liquidity from the strong what? Bullish candle. Then we close lower, okay? All whilst being within the what? The strong bullish candle. And sometimes there can be a demand zone right here, but since liquidity has been swept, most of the time the demand zone might not what hold, because the liquidity will tell you that okay, the market might be what? Might be returning what? Aggressively, right? So this demand zone might just give a little bit of reaction and the market is what? Gonna drop from here. This is very simple. Pay attention. Please do not complicate anything. So at this point, what you have to just wait for is a little bit of retracement back to a supply zone here. In this point, you can target the low of the what? Of the demand zone. But anything can happen. So make sure you mitigate your stop loss aggressively, right? Make sure you mitigate your stop loss aggressively. Like from here, when the market moves in your direction and breaks this swing high here, you can just put your stop loss towards break even, because still this demand zone can hold. Like I said, it is not perfect and it fails sometimes, but most of the times you are gonna be on the right side of the what? Of the market. Okay. All right. So now that you understand all these scenarios, let's go to the chart and let's just see how this will help us and identify the daily bias. We are going to look at some examples and I'm going to show you a trade that I've taken on gold right now. I don't think I've been tapped in as a limit order. I don't know. MetaTrader 5. Yeah, I've been tapped in, right? So at this point, it was the same top-down analysis, right? The market gave me a very strong bullish candle. You can see this strong bullish candle. It was on a 4-hour time frame, I believe. And you were trading within the bullish candle. So I waited from this zone, from this area to this demand that is sitting right here. The market can reverse and do anything. So I was very, very skeptical. Very, very what? Skeptical. So I waited for this demand zone to be broken. And now I'm waiting for a pullback into the what? Into a supply zone that is sitting right here. And anticipating that the market is gonna drop to this lows that is sitting right here. But I'm gonna mitigate my stop loss what aggressively when you move my direction, because anything can happen and the market can behave funny sometimes. Okay. So let's get into some examples so that you understand what I mean. Let me delete all this control and it's okay. Let's get to the chart and let's look at some examples. All right, so we are in the chat. I have to put this one somewhere. All right, so now be on the daily time frame, because that is where we are going to frame the what? The first bias. So on the daily time frame, you simply have to look at how the candles are what? The candles are closing or behaving. Okay, you simply have to look at how the candles are closing or behaving. Now, overall, what do we see? Overall, what do we see? I would like to start on a weekly time frame because I already done analysis on gold and I understand where it is. You can see that this weekly candle closed very, very bearish. Can you see that? We closed very, very bearish with this what? With this weekly candle. So it tells us that on the weekly, the bias is what? Bearish. Why? Because we are trading within this bearish candle. And like I said, if you're trading within a candle, it simply tells you that for the short term, you are trading in the current direction that the market is giving you. But for the long term, you are still within the direction of that what candle. And since the direction of this candle is bearish, it means that for the long term, we are what? We are bearish. But for the short term, we might be trading up and people will say gold is what? Gold is bullish, gold is bullish. But gold is not what? Bullish at this time. It is very bearish and you can look for what? Sales that can be extremely what? Lucrative at this point. Okay. So if you want to mark this one, what you do is that you mark the highs of the candle that is being traded within. Okay. Forget about the lows because it has already been taken. Move on to the daily time frame. Now, when you are on the daily time frame, you mark an area of supply for the weekly time frame. This is the weekly bias that you're dealing with now. So you mark an area of supply for the weekly what? With the weekly time frame within the candle. So you can see that a consolidation happened over here, and we are gonna use that as our what? How do you call it? Supply. So the market is gonna probably come to this what? Supply and drop, right? We are anticipating that. But if that doesn't happen, then the market gives us structure that it wants to drop from this point. who are we not to obey? We are just going to flow with the market and capitalize on what on that. Now, before we move on to the single daily candles, we also have to pay attention to how the structure on the daily time frame is what forming. Okay, so what do you see on the daily time frame? You can see that the market made a high, made a low, made a high, made a low, made a high, made a low. Then there's a shift in market structure over here because it didn't make another higher high. It made something like a lower high, right? Then we are trading within this low that has been made over here and this high that has been made over here. So it is like it is consolidating within what this low and this high, right? But that doesn't mean that we cannot get an entry because this is literally on the what on the higher time frame. So let's now look at what the previous candle did. Let me mark the consolidation zone. So we have a high over here, we have a low over here that the market is what consolidating within. Okay. Now this is the previous day. Let me acknowledge that. I need a horizontal, vertical. I had a vertical line there. Okay. Now this is the previous day, and we are trading within the highs of the previous day, within the range of the previous day. Let's mark the high of the previous day. That is from here to here. But since we are within the previous day, it means that overall we are bearish, right? Overall we are bearish for this day. Since you are trading the current price action for this day, we are what we are bearish. But currently we are bullish. Why are we bullish whilst we are trading within the what the bearish candle? Maybe there's a supply somewhere that the market has to mitigate before it starts what dropping. That is why we are probably what still bullish within this what huge bearish candle that is sitting right here. So now that we have that idea, what do? We still move down to the what to the lower time frame and see if we have reached the supply. If we haven't reached the supply, we can take a trade over here till we get to the supply. So this one is a scenario of what of moderate what short. Okay, it's a scenario of moderate short. If we have market structure within this area that is telling us to get to the supply that is sitting right here before we drop, we can anticipate that will happen and capitalize on the move. That I think happened in the ACN session. I wanted to take the trade, but the spread was bad. I think in Sydney, so I did not want to take the trade. Now let's move on to the 4-hour time frame. Very good. Now on a 4-hour time frame, what do you see? On a 4-hour time frame, you literally see that the candle is now what trading up, whilst within the what the range of the what of the bearish day. Okay, so we are anticipating some kind of supply over here, like I said, to be what mitigated to be mitigated. I don't see any supply within this zone, so I'll jump to the 1-hour time frame and what and try to have some kind of confirmation, a better supply. So I can see this is an area of supply that the market can mitigate before it drops. Pay attention. The market has come to the area of supply. I hope you can see that it is now in the area of what supply. Okay, so at this point, since we know that overall we are bearish and this move that's happening over here is still within this bearish candle, and we can still short the market from here to this lows because overall we are bearish. Like I said, we are still within the range of the what the daily bearish candle. We have found a supply within the range of the daily what the daily bearish candle. So at this point you can anticipate the market to what reverse lower to what to this area, right? If the market wants to be bullish, maybe to come here, consolidate a little bit, but make sure at that time your stop loss is at what? Break even. Okay, it's as simple as that, nothing complicated. Okay, all right. So what is gonna happen is that you need to move on to the lower time frame to understand the structure over here that the market is what forming. So move on to the 30 minutes time frame. Let's move on to the 30 minutes time frame. What do we see here on the 30 minutes time frame? What do we see here on the 30 minutes time frame? Now, on the 30 minutes time frame, we saw that the market was building highs and lows. If you can't see it, well, let's jump to the 50 minutes time frame. The market was building highs and lows. So it made a high over here, made a low, made a high, made a low, made a high, made a low, tapped into the supply and made some kind of an equal low over here. Try to move up by fluid and made what? A lower low. Right. So anticipation of that flow is that you're gonna create a high over here before maybe we drop if you want to be what bearish or the market is what bearish. If the bullish momentum is too high, we might find support over here and what move up. Okay, so that is literally it. That is literally it. Okay, nothing complicated. Just use how the candle closed to what to determine the bias of the what of the day. Now, this is just one example for gold. Let me show you an example how you can use it to analyze any pair, literally any pair. There are not there are no if and buts. There are no, it works on this pair, doesn't work on this pair. It's just market strategy, highs and lows that you're using. So this is extremely easy for you to what follow as a trader. Now let's go to Nasdaq and let's try to what use it to analyze the price action of Nasdaq. I wouldn't go to the weekly for Nasdaq. I'll start from the daily the daily time frame. So as usual, how did the previous day close? How did the previous day close? It closed a what? A bearish candle, but this is an indecision candle. This is an indecision what candle. Indecision simply means that it can be bullish, it can be what? It can be bearish, right? So I'm not gonna consider this candle that is sitting right here. I'm literally gonna consider the candle that has a lot of what conviction. That is gonna be this what bullish candle that is sitting right here. Mind you, mind you, the candle that closed bearish over here is still within the range of what this bullish candle that is sitting right here. So we can still anticipate that the candle is what the candle is bearish, or the daily directional bias is what bearish, because this bearish candle closed within the range of this bullish candle. I hope that is simple. Okay. Now let's move on to the 4-hour time frame. 4-hour time frame. 4-hour time frame. Now you can see that Nasdaq is also consolidating from it's consolidating from this high to this lows that is sitting right here. Okay. It is consolidating from this side to this low, but we understand that we are still within the range of the daily bullish candle, so we might still have daily momentum and perspective. So at this point, since we know that we might still go down, and we have to look to the lower time frame and look at the market structure, how the market structure is what behaving. So that is for the daily bias. Okay, so we are anticipating that the market is going to go up, but we are finding resistance over here. So this is where the intraday bias would come in, because it tells you that okay, we can capitalize on intraday bias, why still what focus on the overall what daily bias, which we anticipate is going to be what going to be bullish. Okay, so let's move on to the 1-hour time frame, and let's see how the market is forming the structure. There's nothing to talk about over here, because the market is still building higher highs, higher lows, higher highs, higher lows, higher highs, nothing. Though it has reached this area of huge supply, which you can anticipate a draw from, but the market is still making higher highs and higher lows. So there's nothing that you can see at this point. Okay. Now let me show you something that is very interesting. Even if you want to take a shot, even if you want to take a shot, understand that we are still bullish intraday, because we are trading within the range of what this 4-hour candle. Always we are going to be trading within the range of what some candle. So wait for that candle to be broken, the range of that candle to be broken before you do anything. As you are gonna take us unnecessary stop losses. Okay. I hope that is very simple. Come from my chart. You can see we are still trading within the range of what is bullish candle, this 4-hour bullish candle. So it tells you that this is the actual low that has been broken for the market to what? That has to be broken for the market to change structure. So if this low has not been broken and you are still ranging within this area, understand that you are trading within the range of this bullish candle, and the market might still be bullish. So don't look for short at this time. Wait for this area to be broken, wait for a red test or a pullback into some kind of supply zone, and short it to the area of what demand that is sitting right here. And just get out of the trade. Simple, effective, and mechanical. Right. So that is going to be all for this video. If you have any questions, you can ask them in the comment section. I will attend to you. And don't forget to like and subscribe to help us grow the channel. And yeah, that is just about it. See you in the next video. Bye.